Well, good morning, good morning, good morning. It is a good morning. Right, so here's a 4-hour chart on ES. Just let you know I'm bullish. I think we're going to try to press higher. And we'll jump into a 15-minute time frame. See that fair value gap right there? I missed that dilly-dallying waiting for this Camtasia platform to start. So this is where I believe we're going to rip up into and higher. Okay, and I may let's see if I'll use that one. And then put the stop below there. It's a little wide because it must be for non-farm payrolls. Wild and woolly price action. So right in there, I'll make it white. So it's a contrast. So inside that 4-hour fair value gap, it's in a discount relative to that low, to that high. We drop down. There's a small little gap in here. I'm watching and see how it behaves in here as well. But this is the one that's the inefficiency. Oh, it might give us another opportunity. Oh, I will take that. Thank you so much. All right, so that might look like a lot of money to you, but it's really not in the grand scheme of things. And we'll take 5 off above here. And just so you understand what I'm referring to here and what's making this even important at all, is that this is a Judas swing. Yes, initially we had this little run up in here, but notice it did not take the buy side here, here, or here. This is what they're tricking traders to trust as resistance, okay? In here, this inefficiency, when price started to rally up, in between this high being taken out, right here, and this low forming, that range, if we look through that and we only focus on this segment of price action right in here. Okay, and I'm going to color that yellow. Okay, so all of this, I don't know why I did that. There. So all of this price range that ran from this area here to here, all that price run, what I'm looking at is how price started the rally here, came up to this candle's high, and then it retraded, repriced back down into the low end here. So from this high, that candle, to that candle's low, this is all efficiently delivered price action. Meaning that it's like a paint roller analogy I use. Like if you're painting your wall at your home, when you apply the paint to the roller and you place the roller against the wall and you roll it up, the first few inches of the paint being delivered to the wall, it's ample, meaning that it's a very significant amount of paint being distributed to the wall surface. But eventually, as that roller keeps being pressed higher, it runs out of the amount of paint that would be equally distributed on the surface of the wall. And you'll start seeing these little porous pockets, which is what this is being shown here, this little shaded area, which is that one single candle. Let me take that off now. So this inefficiency here, just like if you were rolling a paint roller with paint and applying it to this area here, well, looking back at where you just rolled the paint roller, this is a little area where the paint wasn't equally distributed because of this very candle. Let me widen them a little bit. This candle here, it's high right there. And the next candle after the big up close candle here, there's a gap where there was nothing offered back down to at least touch this candle's high. So that's what makes a fair value gap a fair value gap. Okay. Now, why did I name it and coin it a fair value gap? It's offering fair value. If you're bullish, and this is the part that still escapes many of you that are running around trying to talk about fair value gaps when you most of the time don't really know what you're doing yet. And I understand the zeal. It's exciting because you're handling something that you know and see it works, and you're discovering multifacets to something that you're on the road to progression, to understanding. But don't try to teach it yet because you don't know what you're doing yet. But I appreciate and love the zeal and all of your excitement about it. But this little area in here, it's lacking movement back down to at least touch this candle's high. Okay, so because this candle's high and that candle's low, there's only one pass in delivery of price, and it's going up. You see that? So with that movement up, how does that redistribute efficiency in market delivery for price? It must do what? Offer it going back down at a later time. Well, we're seeing it 8:30, which is non-farm payroll Friday. This is where we're at. Happy non-farm payroll. The market drops back down into that area, overshoots it a little bit, but that's fine because all of this area in here is a balanced price range. So it goes down into the range. I mentioned it to you live, and it's part of that 4-hour fair value gap. Okay, so the market has shown a willingness to want to reach back up in to this area up in here. So what we're going to be watching now is, does price want to at least trade back above the consequent encroachment of this wick, which is here. And once I drop this level on, and I'll have the quarter segment. Each one of these is a quadrant, and it's not quarters theory, by the way. And what's all this business about Goldbach levels? I don't do anything with Goldbach. The price engines, the algorithm itself, Enigma has no association with Goldbach. Okay, so for the folks that are out there trying to claim that it is, it's not. Okay, stop doing that kind of stuff because you're sowing misinformation, and I'm going to call you out on it. So anyway, let's drop into a 5-minute chart, and you can see the body's respecting that 4-hour fair value gap high. You see that? And our focus is, does it want to trade above that consequent encroachment right here, that midpoint? So I would like to pair my longs with the existing buy stops that are resting above. You might hear my puppies snoring. The buy stops that are resting above this whole high here. So I want to see it go there because there's actual orders resting up there. And the initial run on non-farm payroll generally is kind of like an FOMC event. It's a fake move. And I don't see this initial rally as the fake move. Okay, it's more this trading back down. And this really gets everybody thinking it's going to go lower. And if you're probably watching live streamers right now, they're probably extremely bearish. And I'm not. So let's do this. I set liquidity top. We'll put it over here on the right hand side. All right. So right away, I could be taking something off because it's non-farm payroll Friday. It's moved enough to warrant a measure of profit taking. It's certainly the 5 handles minimum I preach and teach that you should be striving for. But I want to give it some time, let it cook a little bit. And I would like to see it, in the event that it does want to go up here and shake out and then go lower again, I'm going to put a limit order right at the consequent encroachment level, but for just one contract. Because I'm not certain I'm going to be able to pyramid anything on this one because non-farm payroll is kind of woolly. It does some pretty gnarly stuff. So if it can reach above this area here, one more pass up in there, that will allow me to at least get something out of it. And then I can roll the stop to break even. Then I can just sacrifice the rest of the position. And some of you might say, well, why would you want to do that? You're leaving $7,000, $8,000 on the table. And the reason why I'm saying that is because of experience. You're not going to get the big runs or big wins unless you hold for them. If you don't ever hold on to it, you'll never get the big large range days. You'll never get them. So you have to allow for it to sometimes take it all back except for a small little piece. This way it covers costs, it covers commissions, it covers that little scratch, that itch that you have as a trader when you're in a trade. You feel like you have to have something profitable, or it's a total failure. I've invested, a few minutes. It hasn't been very long, less than 10 minutes, and 10 minutes is not a lot of time, so I can afford to have a move on the market, see it pan out, give me a small little piece like it's about to here, and then roll my stop to break even. And this isn't the only time I've made $10,000. Okay, so here we go. It just got taken out, so now I can roll my stop to break even, plus commissions, plus a small little profit. And why am I not jamming it all the way back up here? Because it could respect this same 4-hour fair value gap high. Notice I have it sitting right here. You're probably wondering, well, isn't that rate below that low where there's sell side? They've already done the damage and ripped through all of that. Okay, so what I want to do is I'm going to sit and watch. Does it give me that close? Any close above this consequent encroachment level is going to be like the hand of the dealers, okay, being shown to you. They're going to show you their cards if it can close above that level, meaning that I would like to see it then run up here and hit my limit order. And then at that time, or how it trades there, if at all, because I could be wrong, then I'll determine whether or not I want to take more off, manually, or if I get stopped out. Everything remains, uncertain right now. And that's the reason why I don't like trading non-farm payroll, because it really is a gamble. And if I fail in seeing anything outside of what I already have posted here as a gain, and it comes back and stops me out and only allows me to have this exit here, and where the stop loss is, where it comes back down, and if he hits it, then, it is what it is. It's done. But it's a wonderful experience for you to study. It's a wonderful experience for you to see why and appreciate why I don't actively go out here and try to participate, because it's not something that I don't need this day out of every month to feel good about being a trader. Okay. I've done it long enough, and I've been hurt enough times to know that this is a day, just like yesterday, Thursday, even though you saw me smoke it and literally destroy it. That's the 2 days of the month where my accuracy, my precision, my trust, my affinity for the market in itself is challenged. So I don't excel very well on those 2 days out of the month. So would it be advantageous for me to keep pushing in those 2 days? Some might say, well, you should just go in there and try to overcome it. Well, I overcome it by not taking any risks in it. But today I want to take those risks and show you that, I'm the Mac Daddy, and there's nothing like this in the marketplace. But there are times, and it still could happen here, where I can get it wrong. And getting it wrong is not failure. Getting it wrong is not embarrassing. Getting it wrong is not a I can't trade phenomenon. It's simply a much more challenging environment. So therefore, I simply avoid it most of the time. But when asked to do so, when pressed by real sincere students, I have no problem showing you. It's not a big deal. So I like where we're at here. I want to see, we're on a 5-minute chart. Let me add those levels back here. So I want to see it close above the consequent encroachment level. If this candle can close above it, then that to me indicates that the algorithm should, if it just doesn't already run right up there and reach for it, as long as it closes above there, I'll trust that it will run for at least my first limit order resting above here. But I'm going to be very careful about how it trades here, because it can run up, rip that, and then just drop and fall out of the 450. I'm sorry, the 4,592s. All right, so we closed above it. Now, my mindset is I trust. I don't get afraid. I don't become nervous because we're seeing a down close candle in formation. It doesn't freak me out. It doesn't cause any anxiety. So I'm going to take this Fibonacci off because we've already accomplished the method here by explaining to you what I was looking for. But I'm relaxed. what am I thinking? How far can it go back down? Well, we have these 2 consecutive down closed candles. That body right there, that could be treated as an order block. So it can trade back down, rip into this here, and then go higher. I don't want to see it do that, because the fact that it needs to go back down into this as an order block, if it needs to do that, that's far less probability in my favor. I want to see it not do so. So it's not a matter of knowing a PD array and expecting it to be hit and respected. There's also a balancing of seeing the PD array in price, but then also seeing and measuring the magnitude of strength or weakness in the market. In this case, I want to see strength. I want to see price reaching up into, without needing to come back down to a discount array. If it doesn't need to go back down and touch this candle's body, and I'll show you what I mean by that. There. So when you see me showing examples where it's silent executions, I'm testing this as a series, by the way, on the YouTube channel, where I'm doing the executions and kind of like talking about what it is that's going through my mind. I'm giving you the inner musings of ICT as it happens real time. I don't want to see it come down and hit that. But if it does, it's completely acceptable. It doesn't change the underlying narrative that we're going to likely go higher. It just means that it's better if it doesn't come down and hit that, because if it doesn't go down there and starts rallying, then it's really going to be bullish. It's really going to be an energetic price run to the upside. So there's a strong contrast to what you understand in a limited capacity about my order block theory, where you would think, okay, this makes sense to come down and hit that and then rally. But what happens if the market is so strong and not patient enough to even want to go back down into that discount array? That means it's exceedingly bullish, right? And I want to be a part of that move. And I want to be in trades, and I want to hold on to my targets when it's indicating those types of things, because it's giving me a great advantage that retail can't perceive in price action. They have no idea what's going on. They have no idea what it's reaching for. I'm sitting here, I'm calmly explaining to you, there's no anxiety, there's no excitement. It's just, this is the stuff that happens all the time. And it's just like the same route that you take to your job. You drive it all the time. You know the person's house on the so-and-so street that you're going to pass. You know all the things. You know the people that you're going to pass that are sitting at the bus stops. It's the same creatures of habit. Well, price action is the same way. After doing it for so long, you get accustomed to it. So you're not surprised. Okay, and surprise invites the elements of fear and greed. If it starts to explode, I'm not going to go, wow, look at that. Where'd that come from? And on the same coin, just turn on the other side, if it were to drop and stop me out, I'm not surprised by that either, because it's the characteristic of this particular day of the month where it can absolutely fool me because it's highly manipulated. Okay, but given all the factors being equal, okay, assuming everything being equal and it is not non-farm payroll Friday, how would I trade this market environment? That's what I'm sharing with you right here. But I'm sharing it under the pretense that it is in a market condition that is admittedly, by my own words, not just here today, but many times. Okay, I always say NFP, non-farm payroll. I'm going to borrow a term I learned from Linda Raschke. It's not for professionals. Okay, so that idea stands true today. And right now, some of you should be, scratching your head thinking, well, if you're uncertain and it's already, showing an unwillingness to rally continuously, why don't you just take more profits off here? I could, but I don't want to. I want you to see what it's like for me to try to trade like I normally do in this particular day. So that way you can appreciate the characteristics and the difficulty of managing the emotions, managing the risk, obviously, which is paramount, and knowing what that feels like watching it, but also trusting your rule-based ideas. So since these concepts are codified by me and I understand them intimately, I am okay with it. Even if it comes back and stops me out, this isn't the only trade I'm ever going to win at. It's not the only day I can be profitable. But when you are a new trader and you're not really versed in what it is that you should be focusing on, it's very easy to encapsulate or try to encapsulate the entirety of your career on the results of that one trade that you're in right now or the one you're about to take. You know, the measure of your success is based on the trade right now. And you need to remove that. That's a plague. Okay. That's a terrible, toxic mindset. And that's why trading is very difficult for everyone, because especially for men, because we are all about measuring up. And in trading, it really seizes on that weakness in the male mindset that they have to measure up. When this isn't about an Olympic feat, it's about making money. That's all this is. It's unless you're in a competition, if you're in a trading competition, then then it's balls out and let's see what happens and who can do what. But on an everyday basis, running it as a business, when you're not gambling, you're not trying to over leverage because you want to have unrealistic expectations realized as a competition result or a percentage gain. If it's just about making money and you're running it as a business, you're not going to take foolish risks, but you're not going to also worry. If you owned a business, a brick and mortar store that sold shoes, you're not going to go to work every day worrying about the likelihood of people not wanting to wear shoes anymore. We're all going to wear shoes. Okay. We're all going to have shoes. We're all going to have a need for shoes. Okay. And there's lots of different brands of shoes. Some are more popular than others. But the premise is that there is a real need. There is a model that can be exploited there. People are going to be born, generally, unless there's a birth defect, they're going to need covering for their feet. So therefore, that market will always exist. My PD arrays, my models, okay, are based on that same idea that I know the market's going to reach for inefficiencies, then it's going to reach for liquidity, or it's going to reach for liquidity and then reach for inefficiencies, or vice versa. But those two premises permeate the understanding that I have with the marketplace and I share with you as my student. So I'm not surprised when I'm looking at price action. I'm like, oh my goodness, why did that happen? That's not a concern for me. My concern is am I following my model? Am I following the rule-based ideas that I've codified, implemented, and I've used for 30 years? So I'm not emotional about it. Frankly, I'm bored. And this is actually not all that exciting. Like, I wanted to see a whole lot more movement for this particular non-farm payroll. So we've had one close above. I'm watching this candle here. And how it's behaving. I'm going to put that fib back on just to show you in relationship to that wick right here. So all of this was an initial raid, and then it dropped all the way back down into a deep discount. We've had one close above. This one didn't close above, and we're now just below it. So I'm demanding price action to show me another close above here. If this doesn't close above it, I will take 3 contracts off just to fund the position and then get a little bit better payment for my time. Okay, about 40 seconds to the close of that candle. We're on a 5-minute candlestick chart, by the way. I had folks asking, can you do things with the 5-minute chart? I don't like the 1-minute charts too fast. It's the same market. The fluctuations that you're watching from 4585.50 to 0.75, that's happening the same speed on a 1-minute chart. It's happening the same speed on a 5-second chart or a 1-second chart. It's the same. The price action is the same. You need to stop thinking and being imprisoned by time frames. All right, so it didn't close. You see that? So I'm going to take 3 off there. So now I'm well funded on this. And now if it were to come all the way back down in to stop me out, it's completely irrelevant now. I've made more than the average person makes in a week's wage, even a professional wage. And I've done so in just a few minutes of the worst trading environment day of the month, which is non-farm payroll Friday. And look how the market's behaving here. So we're trading into that order block. And this is where I would demand the importance of, no, not importance, but the characteristic that this should send price higher. We're in this area here. All of this price action here was a raid. That's my interpretation of price action. And I'm believing that they're going to want to rip up into this area here because they want to attack people that are short. And they enticed people to get short. But they stopped anyone that was already short ahead of time before 8:30. They come up, knock them out, so they can't get a part of this move where they can get really good profits and cover at a really nice, handsome profit. Then they took it all the way back up here, thinking, okay, there's no necessity for price to do what? Pay long holders. Nobody wants to be long. Nobody would trust being short as a smart money mindset. They want to be long. Dipping down here is the discount. This is all trap. But they canceled out the potential for profitability for anyone that was short that trailed their stop loss right in here. So if they didn't trail their stop loss and were short from back here, where's their stop at? Right there. See that? So as soon as the market decides if it wants to go up here, I will take one off right above this high manually if it allows me to do so. I will not move my stop loss from where it is right now. That's leaving a lot of money on the table. I got a guy sent a comment on the video the other day where I had it's a couple $1,000s. It came all the way back and stopped me out. I wasn't in front of the screen, but I am in front of the screen today because it's not from payroll and I want to be babysitting the position. But after the fact, it's real easy to ask questions like, why did you leave all the money on the table? But if this person is a trader, you didn't take every bit of the profit of every trade you were in either. There's going to be times where you leave money on the table, but you're worried about that money. I'm not worried about that money. That's not, that money can be taken and plucked off the money tree that's in here every single day. When I want to sit down in front of these charts, I can do that. So that's the reason why I leave money on the table, because I'm looking for larger hauls. I want a bigger harvest and I know what to do to get them. But sometimes, it's not going to be that day for that particular trade to pan out in its biggest capacity or largest magnitude that I'm anticipating in that specific setup. It may not yield itself to me. So because I don't measure my success on the basis of one individual transaction or one trade, I'm okay with letting it take some back from me. It's a interest loan. Okay. I'm going to let the market take it back from me because I'm going to get it back with interest later on. I don't look at losses as a failure. I look at it as a loan that I'm giving to the marketplace. Someone made some money off of that money that I left on the table. Okay, that's fine. I'm in the business of interest, and I'm going to get that money back with interest in my future trades. See, that's the difference between me and my mindset and how smart money and longevity traders think. We are legacy money makers. We're not, one-hit wonders, day traders getting lucky here and there, windfall victory traders, where you are counting every penny and every penny matters. That's not how we think. We're not worrying about those types of things. We're sitting back, we're relaxing, letting the probabilities do the heavy lifting, and just simply following the model, not over leveraging, not forcing it. All right, so here's a little bit of an inefficiency in between this candle here and here. So I'll be watching how we trade here. This is kind of like the last line in the sand for me. We'll shade that green just to have a little contrast. So there's a little inefficiency here. So in a way, it's kind of like a breaker, kind of like a reason for it needs to start rallying here, or it's likely to come back down and touch and maybe trade deeper into that 4-hour fair value gap, which is in that darker blue shaded area here. when I'm trading, when I'm not educating, I don't have all this stuff on my chart. I have just the levels itself, the numbers, and I write them down on a little notepad. And that's what I work off of. Because all of these boxes become very distracting to me. And like I said many times, and if you listen to like when I was doing Twitter Spaces, the rants and such, unless I tell you I'm reading off of a bullet point list of things I have on a script, the things I want to make sure I cover, most of the time, and I'm talking 99.999% of the time, I'm not following a script. You can hear, obviously, I'm not running off the script. I'm just running off the mouth. These Twitter Spaces show you how I can very easily distract myself from all these different rabbit trails and different tangents I can go off of. And many times, what you think I'm going to cover and talk about, I'll bring in 15 other different subjects. And for some people, it's very difficult to listen to me when I'm live and unfiltered, because I stray off a topic, but I come back, and it's comfortable for me to talk like that. My wife, she doesn't really like to have long-winded conversations with me because I tend to bring in other conversations. She's like, can we talk about this and finish this before we go into another topic? And my mind doesn't work that way. It's 1,000 miles an hour. And if you can't keep up, then stay on the porch. Okay. That's just the way it is. Okay. And unfortunately, that's a weakness in my mind, in my observations as a mentor. That's my weakness. It's very hard for me to stay on task about one subject matter, but I'm bored easily, because there's lots of other things to talk about in the price action. There's other things that I could be mentioning and having a greater appreciation for in the community when I'm sharing and teaching. There's a lot of things I leave out because I'm not allowed to teach it to you. And I don't want to say those types of things that gets under your skin. Oh, it's a bunch of so-and-so. It's marketing. It's this, that, whatever, dude. I could literally keep putting out models every single month, and they'll never be the same thing. And they'll all make money, and people will get funded. People will make money in live funded accounts or their own actual money. And people will still try to discount it and say it's not real. It's something else made up, or it's rehashed something else. There's always going to be somebody that has an opinion about what it is I'm doing or what everybody else is doing. But all of that stuff is irrelevant. Are you making money with what I'm teaching? That's all that matters. Are you understanding what price action's about to do next? Because if it isn't helping you, don't watch my stuff. If it's complicated, understand that it was already told to you that it's going to be complicated. It's not an indicator-based thing where you wait for it to go overbought or oversold and you trust something that has absolutely no bearing on what price is going to do as a result of that indicator saying whatever it's saying. There's no bearing at all on overbought, oversold, crossover, moving averages, harmonic. None of that stuff's making price go up or down. And buying and selling pressure is a myth. The depth of market, the DOM, it's not dome, it's DOM. That in itself means absolutely nothing too, because it can be spoofed. Spoofed is where orders can be flashing in there. Like there's a lot of buy orders above a specific price level or at a particular price level on the ladder of a DOM. And they can be spoofed. Large institutions, okay, like Goldman Sachs and Citi, all these kind of big conglomerates for trading, they have been punished and charges put against them and fined for spoofing and pretending to really try to have orders there. And that it's a gimmick. Okay. It takes more faith to believe in that than it is that just simply look at where the stops should be. Where's the inefficiencies? They don't hide them from you. They can't hide them from you. So because they can't hide them from you, that's an advantage. Because everyone will have a stop loss when the market has been dropping lower. Someone's short. There's someone short in a move that's dropping. Okay. And we don't need to know how many people are short, who it is, what their entity is. This means that they're short. And if they're going to manage risk, they're going to place a protective stop in the form of a buy stop above some important high. Well, prior to this drop down, this high was important. We've seen it go right back above it again. And this high, there's people that are short here that their stop loss was never traded to here. You see that? So that's kind of like what I'm basing the remaining portion of this trade on, that they have unfinished business above here. And if they get really overzealous on the upside, they can take it up here. And I have enough in the tank to allow to adjust that if it can start to run up here, I'll change this 5 to something other than 5 to allow me a runner, because I don't want to pyramid on non-farm payroll. Non-farm payroll is a very challenging market environment where I don't have the faith in my own ability to be very precise in non-farm payroll market structure, because it's quirky. It's a little bit more wild, where it just whips around and it seems aimless. And because of that, I can't trust that I'm building in a larger position with sound footing, meaning that it's too uncertain for me to build larger positions where in another day of the month where there isn't this highly manipulation of order flow, where it's literally constantly for the first hour, it's highly manipulated, and things that I would otherwise trust in market delivery, and I could go in there and just feel confident that I'm going to do this and do that. I've walked you through most of it so far this morning about all of this area in here. And because it didn't do a certain thing I was looking for, I banked some more. So out of the 10 contracts that, was available to me in the entry down here, the partials that I've taken, 1, and then 3 more because it wasn't giving me what I wanted to see. And now look what's happened. Okay. We're in this last down close candle, and we're inside of this fair value gap, and I'm watching, does this candle have a body that closes below or outside this shaded blue area or green area? Here Piper snoring. Piper's one of my puppy boxers. All 3 of my dogs are female, by the way. Sometimes I know some of you like to comment and refer to them as sometimes they refer to them as a male puppy or a male dog. I don't have male dogs. I prefer the females, and I don't mate them. I don't make puppies with them. All right, so I'd like to see this candle or the very next candle start to really gain some momentum on the upside and get out of that green shaded area. The longer we spend time in this little area, the more likely we are to trade back down into the top of that fair value gap on the 4-hour chart, which is this level right here. But being in a position like this where your trade is funded, meaning that you've taken something out, anything that can happen right now cannot remove the profitability of this day. Like, it could gap down there and hit my stop. It doesn't matter, because the profits are already booked. It doesn't matter to my trade psyche, where it won't break me mentally because it did it. If it comes back and stops me out, I'm not going to have a bad weekend because I lost money. It can't happen now. It cannot happen that this trade comes back against me, stops me out, and it becomes a negative experience where I can't go into the weekend sailing into it with a smile. See, that's the strength. That's the benefit of taking partials. And that's why I laugh in the face of people that say taking partials is stupid, from someone that is anonymous in terms of their ability to trade or be profitable. And there's lots of them on Twitter. Lots of them. They have large followings for no reason. So I like what we're seeing here. See how the bodies are staying just at the bottom of that green box. The next candle, well, this candle we're looking at here, it opened right at the low of the shaded area, and we're working our way up in here. I want to see it get really energetic and start to come up out of here. I believe that, man, she's really snoring over there. I believe that, at 9:30, we're really going to rip up into this area here. If it doesn't do before, it definitely will be where I'm thinking that it's going to really reach up into that at 9:30 and really punish the people that are thinking it's going to go lower. The problem is do I have it in me to navigate and stay with this trade and not get stopped out? I think I'm safe with the stop where I'm at. It's at it's below the fair value gap on the 4-hour charts high. and it's behind all the bodies here. So remember, the bulk of the volume is what in the bodies of the candle. The wick does the damage, and it just seems like if I get stopped out, I'm okay. Basically, is what I'm saying. And you really want to have your trade. I'm going to take this Fibonacci off because it's really cluttering up the chart, and we've already seen what it was used for. She sounds like a lumberjack over there snoring. Hey, little girl. Some of you foreign folks are going to assume that that's flatulence. That somebody leave a comment in one of the videos where I didn't mention that it was my puppy snoring, and that's why I do it, because I'm human. I mean, obviously, when I eat and consume food, I'm just like you. Those things are going to happen, but I'm not doing that on videos. I would never do that on video. But I've seen comments from folks I'm certain are foreigners. They hear a sound, and because the sound isn't addressed, and maybe they're watching my videos through like subtitles and whatnot, closed caption. They're thinking that I'm so so unsavory to do something like that on a video or leave it in there. That would be atrocious. So that's the reason why I'm bringing it out. I'm making sure I'm including it that way for the folks that listen to these videos. They hear me talking in a language they probably don't understand, but they're watching the subtitles. So because they hear that sound is not in a specific language. It's my puppy snoring. So that's why I'm making sure it's included here in the discussion. I've had people, when I would, in the middle of a thought, I'd be like, and it would sound a little funny, and they think, did you just belch or burp? And they put a timestamp on it. I'm like, how can they think that's a belch or burp? It's me just holding on to where I want to go with this. And sometimes I want to say certain things, but then common sense kicks in and says, don't go there. So I had to change the direction in what I'm going to say or deliver a specific point, especially during live discussions. All right, so we're coming up on just about 17 minutes till the opening bell. Clean all this up, get this off of here. So while watching this, and when I have these inefficiencies outlined from this candle's low, which is right here, this candle's high, that one single pass up, that big candle right here, that is the fair value gap. That fair value gap, because it's an up close candle, makes it a BISI, buy side imbalance, sell side inefficiency. We have since offered sell side, and I don't like the heaviness that we were experiencing in here because it's spending way too much time at the low end of that. I don't like that. It doesn't bode well for the setup, but I'm going to commit to it for the basis of teaching the difficulties, because it's one thing for me to say I don't like to trade non-farm payroll. And for the people that get out there and they over leverage and they gamble and they guess, and they might live stream it, or they maybe don't live stream it. They don't show it's a live account. They don't show it's live data. For all those individuals that say that, and they always come after the fact. They always come after the fact, say, I made money on this day and ICT doesn't trade on this day. He tells you not to trade on Mondays. I trade every Monday on non-farm payroll week. I trade every single Monday on a non-farm payroll week. But I may not trade a Monday on any other week. I'm comfortable with letting the market have that. So see, we had a close outside that shaded area. So because we had this one single close, it's inside this down close candle. So what I'm weighing out is, okay, well, it could still do what I would like to see it happen and move higher. But the more time we spend drifting lower, the more likely that they'll want to take the 930 run, rip that low, and then come back up here. That's the problem I'm facing with this trade right now. That's what's in my mind. That's what I'm concerned about, but not to the degree where it's freaking me out or making me upset. And if it comes down and does that very thing, I don't care. That's the wonderful thing about how taking partials, knowing where and why you should take that partial, it frees your mind up about needing to be what? Right. That is power. That's strength. Partials remove the necessity for you as the trader, whether you're advanced and you've been doing it for a long time, or you're new and or a fledgling student of price action. It removes that very, very difficult task of managing the impulse to be correct, to be right. Because I'm going to be honest with you, I've said this many times before, and I learned this from Larry Williams. I coined it from many times watching his 4 VHS tape series. You're never right in trading. You're never right. You're never, ever, 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 ever right. You're either profitable or you're unprofitable. Now, how's that possible? I mean, surely you're right if you make money. Well, I guess so. But really, are you? Did you really buy as much as you really wanted to after the trade closed? Because you're always going to say, if I just would have bought more shares, if I just would have bought more contracts, if I would have just bought more lots, if I just would have maximized the contracts they allow me to trade for my combine or my funded account, if I just would have used max leverage, I could have made this much. So what are you saying? You weren't right. Even though you made money, you're saying you weren't right. Because right is defined by you by doing the most. And I'm telling you that's a lie. That's toxic thinking. And that's why that you're never going to be right. So your objective in trying to be right in your trades, that's a foolish errand. That you can't do that. It's impossible for you to be right. Because even if you share your profitable trade, someone, and I do it, people come into the comment section and they'll say, but why didn't you take profits here? And why didn't you take profits there? That's your way of doing it, but you're looking at it after it's happened. Why don't you show me your trade where you did that? They're not doing that. So it's pointless to have conversations about why didn't I do this and why didn't, because I didn't trade it that way. Okay. When I do a trade and I'm explaining it to you and I'm showing you why I'm doing certain things, that's how I'm managing that trade based on my understanding, my belief in how the market may behave or it shouldn't behave. I'm being responsible. I'm owning my own decision. I'm not lending it out to someone else to critique it and then learn from their insight. I'm not here to learn from anybody. I already know what I'm doing, and I'm comfortable with being not perfect. My results, you see them. You see the results of my students. You see the growth in our community in the phenomenon that is smart money concepts, and it's global now. It's viral. It's everywhere. And it really upsets a lot of people because it casts a very large shadow that they can't step outside of, because we have students, you have a mentor that can do this, that can explain it before it happens, do it in great detail. And my students are able to learn that same skill set. And unfortunately, it's created a very large body of witnesses that have testimonies that are undeniable that it works. It works in their hands. They're trading markets that I don't touch. I won't even comment on. And they're making money using what they learned here on this YouTube channel. And that is inspiring. It should be inspiring. It should not be a reason for you to go out and start doing videos. Here's why ICT concepts or smart money concepts don't work. And then not even teach it the way it's been taught, or even refer to it the way it's been taught. You can make videos saying that you failed using it because you haven't spent enough time learning how to do it properly. That's fine if you need clicks. Okay, there's a lot of people put my name out there in their YouTube videos just to get clicks. I get it. Times are hard and groceries are more expensive. Things are expensive, and my name sells right now. But in trading, if you're in this industry to learn how to make money, people don't have any time for all that nonsense. They're here to learn how to trade. And if someone's not learning how to trade from me, they're not going to spend time here. They're going to go on to somebody else that's going to be able to help them. And I'm telling you to do that very thing. Just like I said yesterday in the YouTube video I mentioned, that if I'm not helping you, don't spend any time here. If I'm a distraction from something that maybe you're already profitable, you have a model that works for you, and I'm causing a great deal of confusion for you, and now you're having some struggles. Don't listen to me. How hard is that? It's very easy. I don't have a fragile ego. Like, I don't have a dependency on you loving me. But for the folks that want to learn how to do this, it's been made available to you for free. All you got to do is put the time in. And you don't have to come to this video. You don't have to come to this YouTube channel. You can literally study what's already been shown to you the last 2 years. You never need to come back to these videos because I've already taught it. It's there. It's already in there. You've experienced it already. What's missing is that you haven't spent time doing it, back testing it, studying it, and doing forward tests where you're watching tape reading, where you're not doing a trade. Okay. And again, this sort of people, show me your tape reading. Okay, show me your level 2 data. Level 2 data is a gimmick. It's a bunch of bullshit. Okay, let's be honest. It's bullshit. And it's the same thing as the depth of markets, the DOM. It's all spoofed. You cannot spoof this candle being an inefficiency. You cannot spoof this inefficiency down here in the 4-hour range that I highlighted. You can't spoof the fact that high right there had a price run move away from it. So there's going to be liquidity resting above that. You need bookmap software, program, gimmick, application to tell you there's a stop loss up there or orders above that. You need that. I don't need that. I don't need that. But in the beginning, it makes sense for you to be able to see it visually with these crutches, these little aids, these helpers. But eventually you're going to outgrow them and you're not going to have anything on your chart. All these things are on the chart so that way you can see what I'm weighing in terms of concern, importance, what's salient to me in this price action. Where does my focus lie inside of what we're having right now as price given to us? I do not have anything on my charts. When I'm trading and I'm not trying to teach it, my charts look like this. That's it. That's it. It's naked to me. On a notepad, I have the same levels that is being indicated here. The high of the 4-hour, the low of the 4-hour fair value gap, the high and the low and the midpoint of that inefficiency on the lower time frame that I literally did it in front of you. I have these two levels here. In the midpoint level, I'm written down on a notepad. And what I'm consciously doing, because I'm not trying to talk to anybody when I'm trading, I'm looking at where price is every few minutes, every individual minute. I'm looking at other things in relationship to that. And those measurements of how much time we're spending, how does it behave? Is it respecting these levels with the idea that I think we're going to go above this high, and up in here post 9:30. So when the market opens and the New York session opening bell rings and on CNBC, they're all clapping like they did something amazing. When that happens, that rush of liquidity, that order flow that comes rushing into the marketplace, I believe that they're going to use all those orders coming in. That is not buying and selling pressure, because when that liquidity is coming into the marketplace, when your stop loss gets hit, that's the puppies rolling around in their kennel, rolling on their toy. When all that order flow comes in, that rush, and it hits a stop loss, when that stop loss gets hit, if it's a sell stop, it is flooding the market with sell orders at the market, whatever price you can give me. And what the algorithm does, it uses that constant rush of new orders coming in the marketplace to run up and reprice to another pocket of liquidity here. Buy stops, buy stops, buy stops. Remember? Relative equal highs here, and then over here. We have that high back there. So they're going to target that when the opening bell rings at 9:30. That's my belief. If I'm wrong, guess what? I made money. Did you make money today? If you watch this over the weekend, did you make money on Friday? See, I'm in a sweet position right now. I don't need my trade to be right. I don't need to be right. I'm right as rain as far as I'm concerned. It is straight up profitable for me right now where I'm at, and I don't need to be right, and I don't have to be afraid of being wrong. If this doesn't pan out and stops me out, I'm uploading it anyway. So I don't know how to make it any plainer than that. Like, I have zero emotion. If this fails and doesn't pan out like I want, it doesn't mean the things that I know and trust won't work for me next Monday, next Tuesday, next Wednesday, next Thursday, next Friday. It doesn't mean that it won't work for me next May in 2024. It won't pan out for me, in months and years ahead. It's not going to change that. But see, when you're new, you tend to think that way. If this trade doesn't pan out, I'm skipping over SMC, Smart Money Concepts, ICT stuff. It doesn't work. I'm going to skip over this because I can't make it work, so therefore it doesn't work at all. And you'll deny the ample evidence that it does, and people are making real money with it. Undeniable evidence. So who really has a firm grasp on their emotions here? I know I have. I'm bipolar, yeah. But when it comes to this, I'm very focused. I know exactly what I'm doing. But I can't be focused if I'm in an environment where people can actively ask me questions while I'm doing it. Because what does that do? It opens up this beautiful distraction where, because of my experience and my character, I can run rampant and go through all these different tangents. And because of my importance of making sure that you understand anything I'm referring to, I go overboard in trying to make sure you understand to a degree that is just a testimony that my concern is I want you to really know what I mean. Not just, the market should go up to those stops up there at 4,600. Okay, why? Why do you think that? Oh, I'm glad you asked. Let me go through all of this. And some of you don't want to hear that because you just want to know, tell me how I can easily just get to, it's going to run to 4598.75 high. Because if I can know that, that's the bias and I can make money. Wrong. Absolutely wrong. But you don't want to hear that lesson. You don't want to hear that truth from me. You don't want to hear it. You reject it because it doesn't fit your underlying narrative to what you believe how you should learn. You're coming to me with no understanding about what it is I'm teaching. And you're going to tell me, and many of my paid students, which I don't have a paid mentorship anymore. I will not be opening one in the future. If my books sell like hotcakes and it gets real popular because of the books, I'm not going to do a mentorship where I'm charging people money for lessons like that again. I'm not doing that. Like I'm not trying to do anything except for help you. That's it. That's all I'm trying to do. And many times you're fighting me. No, I don't want your free help. I know how I should be taught. I know how I should learn how to do this. When you don't even know what it is you're trying to learn. So how can you tell me as the teacher, this is how you should teach me? No. A real student's going to say, I'm ready to be taught. What is it you have for me to learn today? And then let experience dictate the pace and direction and where you go with it. But in today's society, that doesn't fit. It doesn't fit the mold. It doesn't give the comfort that's necessary for that. Give it to me right now and it's already too late crowd. That mindset of impatience, entitlement, it's rampant right now. And that's why I'm off of social media like Twitter and stuff. It's toxic. It's really toxic because there's people there that pretend to be smart and they're idiots. they're fools. And I don't have time for that. Over here, I can be in my little bubble. I can talk. If you choose to come here, you came here by your own choice. I didn't drag you over here, right? And you're watching these videos because you want to listen to it. You want to learn. Or you want to take something from it and, run into your little circle of, circle jerks and make fun of something that you still don't understand or even come close to replicating. So again, I will accommodate all manner of audience. You can come here to learn. You can come here. You feel like you're smart, and look at something and go on social media and lie and said you did the same trade that I did, or you did something opposite when I was trying to do something and said you made money, but you're not really showing anything. I don't have time for that. You shouldn't have any time for that. Okay. If you're going to take the time to even post anything on social media at all, here we are, an opening bell. Let's see it rip up into this, and up here. So I'm going to get my orders ready because if it does, let me take this off. And I want to just do 3 above there, and I want to do 1 manually if it'll allow me, if we get above here. So these are relatively equal lows. So I'm looking at that. So let me put it up here visually. So I'm watching. If price goes up into that level here and goes above it, I'm going to close 1. Piper. Hey, Piper. I'm sorry, that's Scout. Stop. Settle down. All right, so far so good. I want to see it really accelerate, reaching into that area here. So if I close 1 above this area here where buy side is, then if it gets up to here and takes that limit order there, that will give me 2 remaining contracts that I'll treat as a runner. And if it can get up here, I'm going to place my stop loss right at the high of the 4-hour fair value gap. So it's not going to be much of a change, but I do want to have a little bit more protected on the balance of the 2 contracts, which really won't make a difference in the grand scheme of things. Now, I want you to think about the mindset of who was hopeful in being profitable this morning. They set the trap that it was going lower, then it really dropped down here. The mindset is, okay, the market's weak. It's probably going to keep going lower. And I don't want to subscribe to that view. I want to see where they left traders feeling safe. These stops here that have been trailed from here to here, or those individuals that were short from up in here that have their stop loss here or felt like they had to place their stop above that old high back here. Right back here. Okay, so that's what I'm attacking. I'm targeting that, and I'm running against the logic of a retail trader that is hopefully, wanting to see lower prices, and they're trying to be responsible with their account and using stop orders, which in this case is going to be, their undoing if I'm correct in my trade and it pans out like I want it to, but I don't need it to. That's the wonderful thing. Like, that's a wonderful place to be in your trading, where you don't need it to do this. But if it does, wow, what a feeling, because it profits and it's an encouragement to you. But you don't have any of the negative components that come along with, I need it to be right. Because to be right means, in your mind, you have to be right to be profitable. I can be profitable and not right. Think about that. How's that for logic? And that's what really, I believe that traders should focus there, and professional traders, that's how they operate. They operate in probabilities that allows them to be profitable. They leave their ego at the door. They don't care about being right. They don't care about having the better field than the other guy. They don't care about, anything except for, did they make their ends meet? Are they making more money? Did they protect what they have? Are they preserving capital, which is the number one rule? Number one rule in the game is to preserve capital. And that was the whole premise of how I traded so far this morning, is I allowed the market to pay me. There's no way that this trade can come back against me and I can lose money on it. It's not going to happen. No, I shouldn't say it that way. There is a way for it to happen. If it were to be here, right here at this moment, and they drop a nuclear bomb somewhere, and then the market just gaps all the way down 100 points, then that would be a losing day. But that's the inherent risks that are associated with trading. When you sign up to your account and you put real money into a brokerage account, you're basically saying, as long as there's liquidity, we'll try to get you out, but there's no guarantee. And there's no guarantee you're going to get the price that you are hoping for. You might get a price that slips you horribly. Barring that event, there's no way that this can turn into a negative day for me. And that is a very, very reassuring and comforting feeling as a trader. It frees you up to just sit back and trust what your model should be doing. And if it doesn't pan out, it's not going to cause you to squirm. Whereas if you've taken nothing out of the trade, you've taken no partial, you are hoping and praying, please start moving in my favor. Please start doing that. See how I touched that right there? Now I want to see it do a little bit of that and then rip higher. That's what I want. I don't want to see it close below the midpoint of that fair value gap in here. So it's real important that you guard your mind and you learn things that help you understand how you behave and how you think about the market while you're in a trade. Many times it's the very things that you are ignoring about yourself that you keep repeating that are going to be toxic to your development. They're hindrances to you, and you don't realize it. You think by pretending that it's not there or blocking it out and lying to yourself, well, I was right about this, I'm right about that. But you're not addressing or at least identifying the things that are holding you back and that are problematic. The toxic thinking, the what if thinking. What if it turns around and I lose on this trade? Okay, that's the same thing as what happens if you start to drive to work tomorrow. Well, I shouldn't say tomorrow, it's this Saturday. Well, some of you work on Saturday, right? The next day you go to work. You get in your car and you get in your car and you start the car up and you think, oh, what happens if I get a flat tire? Well, what are you going to do with it? You're just going to leave the car on the side of the road and abandon it because it's got a flat tire? No, you're going to take care of it. You're going to address it. You're going to lose some time. You're going to get late to work. You're going to lose some wages. You're going to spend money that you don't enjoy spending. It's a cost. It's a hindrance, but life's still going to go on. You're going to still trust the model of getting up, starting your car, driving to work, going there, and exchanging your time for money so that way you can meet your bills, right? So trading needs to be the same way. You need to be able to say, okay, my trade that I'm in right now, if it doesn't pan out, it doesn't change my model. I'm still going to do these things. I'm going to manage risk the same way. I'm not going to over leverage. Do you every day go to work speeding 120 miles an hour? No. No, you might do it once in a while when you're really, really late, but for a small period of time. But that's exaggerated risk. What is it risking? It's risking your life, your property, other people's property, and their health and their life. And it's risking you what? A ticket, potentially jail time because you're speeding excessively. And all of that is excessive risk. So the same thing in your trading. You don't go in there just because Top Step or another company out there says, hey, I'm going to allow you to trade 15 contracts in your combine. That doesn't mean do it. Just because your odometer says you can do 100 miles an hour doesn't mean that you're on a road that you should be doing it on. There's risks to doing that. So being able to manage your expectations, manage yourself, manage how you behave. I'm looking at this candlestick right here. Inside of that fair value gap. Right there. Like to see it respect that and start descending it higher. Spending a lot of time in this area here. I'm not overzealous about the why it's spending so much time in that consolidation. I lost my train of thought about what I was saying. But the main thing is you just want to be able to remove the necessity about being right. Okay, using the same analogy of driving to work. What happens if you get in your car and before you start the car up and you think to yourself, what happens if my battery died? Well, you're going to get a hot shot. You're going to get someone to give you a jump, or you're going to have to go some way to get to a store to buy a battery to replace it, and then you go back to doing what you're doing. It's an exchange for your time. It's a nuisance. It's not fun. It's not pleasurable. It's an expense that you would rather not be spending, but that's how trading is sometimes too. But when you are a new trader, you're thinking, I got to find a way to avoid losing. What are you really saying about yourself? You have a character flaw that you can't accept imperfection. When professional traders embrace imperfection, we embrace it. We know that we can't be perfect. So therefore, our strength is on our acceptance of the uncertainty. This hard right edge over here, where no one knows what the next candle is going to do, I'm comfortable in that area. I'm real comfortable with it. As a new trader, it's scary. It's uncharted territory. And there's mythological beasts and monsters and sea creatures out there that's going to take you under and drown you and devour you. I was there before. I know what that feels like. But I'm also, that same person that says, if I get out there and I go and deep sea dive in shark infested waters, I run the risk of getting bitten, yes. But if I follow a model and I stay in a close proximity to the boat, I'm in a cage, I'm not bleeding, I'm not putting chum in the water, those chances are far less likely. And I could still encounter these beautiful creatures that God's created. So there's a measure of managing the risks. Okay, so that's what trading should be about. And it's fun when you are able to control the risk, keep it manageable. And then by doing that, that association of managing risk appropriately allows you to enjoy the experience of trading. It's fun, where it's not a terribly frightening experience. Where for a new trader or an inexperienced trader, trading is very, very scary because of what you're thinking. You have all of this toxic, what if this doesn't work? What if I do this wrong? What if is a waste of time? Because majority of what you're doing with the what if scenario is negative. It's rooted in negativity. What if this doesn't work out for me? What if I don't make any money? What if I wasted all this time watching these videos? What if I've wasted time believing something and it isn't really happening? What if it's all a scam? What if all these people were paid actors and they don't really make money? I saw that one too. It's funny, right? It's ridiculous. But what happens if you just really put the effort forward and you just simply made your best attempt to do this and you fell in love with it and it started working for you? What if it happens like that? Think about all the time you wasted not doing it. Think about that. What about all those opportunities where you could have been doing this stuff sooner? That's what I try to instill in all my students' minds. I want them to think about the opportunities of how this may impact your life positively. I'm not promising you're going to get rich, folks. I'm not saying that at all. But I'm saying that you will know how to read price action and you will do it better than anyone else is going to be able to teach you in a book, course, or whatnot. It's more predictable. It's not ambiguous. It's something that is transferable knowledge, and it is fun. When you really learn how to do this, it's fun. And you can turn it into whatever you want to turn it into. You want to get wealthy? There's lots of ways to turn this into a wealthy income stream through your trades that are profitable. You let time and money management and then the money management aspects do all the heavy lifting, compound interest, and let time do that. But in the beginning, as a new trader, time is a commodity that you don't have a lot of in your mind when you have to submit to the fact that you have whatever time you have left. That's it. However long you're here until you're taken out of this world, that's how much time you have, and nobody knows that. And I'm not saying that that should speed up this urgency that you need to learn how to do it real quick, because the urgency of trying to learn how to do it real quick, that unfortunately is a problem, and it causes people to want to rush. They want to get through it too fast without really learning what it is that they should have learned. Two things are about to happen if it pans out. If it goes above this swing high, as I mentioned before, there's buy side above that. And if it trades into that, top left. So if it trades above that high, I'm going to close. I'm actually going to do, what is it? 3. Yeah, I'm going to do 3. And then if it runs to this one here, I'll be done for the day. Because it's a little late in the morning and my wife just gave me the hairy eye. So we'll have to be satisfied with that. But hear that bird? That comes every morning around the same time. It sits out there on my deck and starts chirping. But it's so fun, seeing how students, do the very things I encourage them to do. And the two things I said I was going to do is I'm going to take a profit here above that 93.5 level, should it offer it to me. And let me just do it this way because it might pull some shenanigans on me. All right, so that way I limit orders there. So if it goes above it, it'll fill me, hopefully. And then if it does that, then I'm going to roll the stop up to just half of this wick is here. See that? I will roll the stop just below to 45.77 even, which is below consequent encroachment. Okay, that's what's going to happen. 3 contracts will come off. 3 will be left here also. If it really ramps up there, it'll completely close out the trade, and now we'll have one more opportunity to be able to, prance around my house like Mick Jagger and tell my wife I told him so. I told him so. Scout. Hey, Scout. It's almost time, honey. Relax. She wants to get out and run around. Bear with me a second. These are all the things that usually get edited out of the video, but I just don't want to do that stuff anymore. You're getting it raw and uncut. Like that? Raw and uncut. Hey, you need to settle down a little. You want chicken foot? You want chicken foot? Here. You want it? Don't let me hear you anymore. These are the times as a new trader. I'm not really in front of the laptop, so it probably didn't pick me up on volume. But these are the times where traders get nervous. They get scared, like, oh no, it's going back against me. It's pulling back inside of this range expansion, which if this candle closes becomes a fair value gap. I would want to see that stay open. If this candle closes, I don't want to see it dip all the way down and revisit or reprice back to that candle's high. I don't want to see that. There's liquidity here. There's liquidity here. It's in striking distance, and it is opposed to the underlying sentiment that's been engineered this morning where it's going to go lower. But they canceled out any opportunity for those people that were trying to be short to be profitable. You see that? I mentioned that earlier in this recording. So I'm trusting that I'm on side. On side means that it's going to run for the liquidity that I'm targeting. I apologize if you hear her crunching in the background. She's eating a chicken foot. I give them to them once a day, and I think she was demanding it, basically, that, and she wants to get out and run around. She's in a kennel right now, because if I don't put her in a kennel, she'll be crawling up and jumping on my lap and licking me in the face, and then it would be much more distracting, and I probably wouldn't have been able to stay on track as much as I have been here, even though some of you may think that this guy's all over the place. And I'm doing actually pretty good compared to what I've done in the past. It's a lot better focus. I've been enjoying my time away from social media. I've been away from Twitter. I miss engaging all of you. Obviously, you can see that by me doing this. But it's nice not seeing all the other stuff that social media constantly posts outside of trading. It constantly keep you depressed. I ain't got time for it. All right, so again, we've been working on a 5-minute chart, so I don't want to come off of the 5-minute chart, but when this trade hopefully pans out and it gives me at least a 45.93.5 fill, then I'll drop down to a 1-minute chart and give you the view or the lay of the land, if you will, on what the 1-minute chart looks like. I have forced myself to only use the chart that I'm showing you here. I'm downstairs in my, I guess it's called the great room. My trading room is upstairs where you have all the monitors and stuff. I've only used what I'm showing you on the laptop. Okay, so everything, the perspective I've had on the marketplace was limited to just what you have seen in this video. I've not looked at anything else. I promise you in Jesus' name, there's been nothing else. There's no added advantages of any other time frames. Everything was based on what I'm showing you here. So that way, for the folks that are saying, I see you have that big setup, and that's the reason why you're profitable. No. Those things help me, but they are not requirements. You can literally do this with one laptop and not have anything but one screen. You don't need to divide it up either. You don't have to have all the windows segregated. It's showing you different multiple time frames. If you know what you're looking for, you simplify your model. And in my opinion, I've simplified the things I've taught on this channel, again, here on one of the most complex, difficult trading days by my own description and definition. Non-farm payroll Fridays are difficult trading days because they're highly manipulated, meaning that what you might anticipate in any other given day, they may deny you. They may not allow me that 93.50 exit. They may not allow me to get any more profit. They may just send it lower and take the stop, and that's it. I don't care if it happens because I've done enough. But for some of you, it might not seem like a victory. It feels like, oh, that was a failure. It didn't work like you said it was going to. So therefore, smart money concepts don't work. Well, that's flawed logic. You're still going to be working next week. So, I mean, that's the reason why you should be learning how to trade. Is that way you don't need to go to work next week. You don't need to get that paycheck that they're going to give you for prostituting your time. think I'm going to take the bed out. You want to go for a ride when I'm done? My wife doesn't like to take rides in the bed because I get a little heavy on the acceleration pedal. Not all the time, but just sometimes. And because of the torque and the pushing into the chair, it makes she doesn't like that. I think 2 years ago we were driving and some nut job cut in front of me. Basically a hater, some old dude driving in a economic vehicle, electric thing, cut in front of me, no signal, whatnot, and I just wanted to fly by him. My wife's like, "No!" And like, "Don't do this. This is why you doing this. Let him do it." I just wanted to buzz him, like Top Gun. In the scene, it's like, "Can we buzz the tower?" I wanted to buzz him. So now I'm looking at the consequent encroachment of that wick right here. So I want to see, does it just reach into that or just above it and then run for that liquidity? It can go down there and wick below it. I just don't want to see it close below it. You can clearly see how all this becomes a lot more confusing and having too many things on your chart. That's why I don't have it, but I'm showing you visually. So hopefully you can appreciate what I'm doing here, because this is a terrible distraction to me. But I'm showing you from the conceptual perspective what in my mind I'm concerning myself with and focusing on. It's that very level right there. Okay. I apologize if you can hear my dog chewing up her chicken foot, but that's what they say in the real world is, I'm a human being. I got puppies, I love, and they're part of my family. And if I'm not in their sight, they'll freak out and cry and bark and yipe and go on and on. My wife is very jealous of that, by the way. I do everything for them, and they love you most. That's because I'm ICT, baby. Come on. Yeah, I know. I only pretend to be full of myself on the internet. Trust me, I don't feel that way about myself. In reality, I just do it to harass the people that don't like me. And you know who you are, Mr. Watching my video but don't like me. All right, so I have to submit myself to the willingness of letting it go into this fair value gap, which is what I didn't want to see it do. I don't want to see it come all the way. Remember I was saying I don't want to see it come back all the way to that candle. So I have to submit myself to the idea that it may need to do that very thing here. It's completely permissible. It's better if it doesn't completely close it. If it trades where it's here and then starts to rally up, okay, that's fine. Remember, there's 3 PD arrays, 3 things I'm looking at that will cancel the trade. It will remove the probabilities of it panning out in my favor. So after 3 PD arrays that I've outlined in my mind, and one of them was the consequent encroachment of this wick here, it's this candle's high, and now it's this order block level. If we trade back into that order block, I'm uncomfortable holding the trade, and I'll probably, I'll cancel the trade at that point. I won't even let it go down to this low. So in other words, if it trades to this order block and digs into that body right there, I will nix the trade right there. And even if it rips back up here, I'm okay. I care less. Now, that's something that most of you don't have a comfort level with, because you need your trade to pan out or you feel like a failure. I don't feel that way. I don't feel that way at all. I want to go home with a couple $1,000 today, in addition to what I've already took away. That's how my mindset works. So to sit in a trade and let it go all the way back down below this order block's mean threshold, like I don't want to see it do that, because the mean threshold of this down close candle is also basically the low of that fair value gap that's shaded in green. You see that? So there's a lot of things that, to me, it doesn't need to go back down there for that. If it's going down there, it's going down there to go lower to a degree where I'm uncomfortable holding the trade. So this is this fair value gap I mentioned earlier. that's where we're at right now. In my mind, I see traders seeing that as, oh, we got strong resistance at 45.93.5, and they're wanting to go short. So what does that do? It engineers liquidity, more buy side. If there wasn't already a significant amount here, which there is absolutely a significant amount up here, this level and this level is building buy side liquidity, because they see this. When I say they are the retail traders. Hey, Scout. Hey, Scout. Enough of that. She's rowdy. When we got her first time home with her, she was very timid. And Piper, the other boxer puppy, she was rowdy. Like, I wanted to rename her Rowdy. But Scout was always bullied by her. And now Scout has flipped the script, and now she's the rambunctious, rowdy one, and that's the one that's making all the noise. Piper's been laying at my feet the whole time, just being real. She's a sweetheart. I love them both, but Scout, I guess because she was bullied by Piper her first few months, now she's like, well, I'm going to be the dominant one. And she does. She dominates her in every aspect. She was smaller in stature and size, but she's gotten bigger. Like, she's filled out better, and she's trying to exert her dominance. So she's looking at Piper laying next to me, and she wants to be over here trying to usurp. So this is what I was referring to earlier, like on non-farm payroll Fridays, the things that you want to see happen, which, it should have very easily just came right out there and swiped that. But look how close they got. Look at the high. It's the 93.50 level. So what do I need to get out there? I need that spread. So it's denying that. It denied it. Okay. This candle's high was 93.50. This candle's high is 93.50. And you wonder why I don't trade aggressively and more frequently when the non-farm payroll Friday event comes around. It's because of these very characteristics. They're highly manipulated. Just want to take a quick look at the NASDAQ real quick. All right, so it's pulled into its fair value gap as well. Liquidity is resting here. I'm going to roll the stop up to where I said I was going to do it to earlier. So I'm going to lock in. This is rolled up to 3,000. If it goes there, I want to be out anyway. So now I've completely removed any concern. Should it have decided not to go to my limit orders, I've funded myself, I paid the trade, and I removed even further. Good grief. She's she wants out of her kennel, doesn't she? She got her way, just like my wife. I'm going to keep doing this. Oh, there we go. There's a limit order. And then see if we can punch up there and get the other one. And randomness again. There we go. Beautiful, beautiful, beautiful. You better film me. I thought so. So again, one of those instances where I guess this stuff still works. I guess the they haven't figured out how to beat ICT. So I've enjoyed my time with y'all this morning. Hopefully you got something out of all this. If anything, if it's inspiring to you to stick to what it is I'm teaching you, it works, folks. I promise you, there's nothing else. There's absolutely nothing else out there that's better than this. This is the market. This is the market. Look at the turning point here. I told you it can go down and touch that. It's better if it doesn't, but if it does, I would expect it to do what? Move higher. In the event that I'm incorrect, what was I doing? I'm making sure I'm paid. I rolled the stop up and then delivered like gangbusters again. Every week, every day, and it won't stop. Until I talk to you next time, be safe.